Another refreshing day on share markets saw global shares lift this morning following yesterday's nervy trading. The upswing extends the gains made right through March. One investor put it well, in March it wasn't that things got materially better, they just got less worse. There was also a bit more risk appetite today in currency markets with the yen and US dollar out of favour, while the New Zealand dollar clawed back. The last time I checked, we were at 57 cents to the US dollar. This weekend, global leaders will meet at the G20 meeting to discuss the recession. The G20 effectively consists of the 20 largest economic powers. Of course, there is plenty of lobbying going on ahead of the meeting, as there are mixed views on where to from here, but the outcome is very important. Economically, trade and rural-wise, we want to see a combined effort to rid this recession, get some money in consumers' pockets so they can get out and buy more lamb, beef patties, yogurt, fruit and veggies. The rural sector hinges on demand from our trading partners, so a positive response from the G20 meeting will be important in the short term to farmers. The currency always presents a risk to the agricultural sector, but it is key at this point. Typically, New Zealand is able to offset lower international commodity prices with a lower currency. This means that local prices are able to hold despite changes in demand from some of our markets. The issue we are facing right now is that the whole globe is in recession, which has not happened since World War II, and we are actually faring better than most. The risk this presents is that we might see the currency and international prices get out of whack, where we see global demand, meaning prices will stay low, but our currency rises because we are in better shape than most other countries. This rarely happens, but if it did, it would likely have a negative impact on the rural sector. We are picking that this is a risk, and it is likely that the New Zealand dollar will rise later this year as this fact begins to emerge. But anything can happen. No one expected the dollar to rise as much as it already has. So keep an eye on the New Zealand dollar over coming months. A rising dollar could be negative for farm gate returns.